just announced their earnings, so we're awaiting that to get flashed on the screen. So I think there is a consolidated net loss of 47.5 crore that the company has reported. These are the consolidated numbers, which compares with, I think, 33.5 crore if you look at it on a year-on-year basis. So that's a bit disappointing. You can see the stock react. 47.5 crore is the loss that they've reported. On the top line, it's come in at 93.42 crores,
which is a good 40-50 odd crores lower than our estimates. It's also a top line miss. Remember, the estimates for Kaveri Seeds were all over the place on account of lack of clarity in the impact of on the impact of fall in the cotton BT prices. Still, the range was just 110 crores to 163 crores. So coming in at 93.4 crores, the top line has actually come in lower than even the lowest estimates. And as we speak, the stock is down 4.3%. Have you managed to get the EBITDA?
I think it's an EBITDA loss of 45 crore that the company has reported, so that's not going to go down well at all. The stock is limiting its losses to nearly 5%, but on all parameters, this is looking quite weak. You know, apart from the top line of 93 crore missing our expectations, it's also more than halved if you look at it on a year-on-year basis. The comparable figure is 204 crore for the revenues in Q2 of FY15. This year, that 200 crores has come down to below 100 crores, which means it's a more than 50% fall that you can see on the top line on a year-on-year basis. This time, we've reported a EBITDA loss of 45 crore, which would compare with an EBITDA of nearly about 32-33 crore on a year-on-year basis. So look at the way the operational performance has collapsed, because of which the company has reported a loss of 47.5 crore in this quarter. As Mangalam was telling us, we weren't expecting a great set of earnings because of lower BT cotton sales. So the volumes have seen a decline of close to about 60%, at least on an expected basis for BT cotton. But that said, I don't think the street was expecting such weak numbers. So keep your eye on this particular counter.
That's right. And as we speak, we're also joined by Chandan Taparia of Anand Rathi Securities. And also Kunal Bothra joins us from LKP as well. Coming to you, gentlemen. First up, Kunal, Kaveri Seeds has just reported the number. The stock is down 50% from the top itself. Any first views on what the charts say for Kaveri Seeds?
Yeah, I think, Mangalam, the stock was forming a base around 410, 417. So I think, we'll need to see how the stock reacts, if it manages to close on a weekly basis below this, level or not. But if it does, then it signals a lot more, weakness in the next couple of weeks. So I think from a trading perspective, one has to be, be cautious on the stock at this point of time. Wait for a trigger below 410. If it does that, then I think it's more weakness.
Kunal, what would be the strategies that you would recommend on the mid-cap index? Because after outperforming last week, today it's been underperforming. The mid-cap index has lost a little more ground compared to the frontline index.
Yes, Rima, I think, and that's probably, the reason why you're seeing, more weakness at the lower end of this particular correction. I think at the start of the correction, you saw some bit of, pressure on the heavyweights. The large caps were the ones which saw a good amount of pressure. But I think at the lower end of this correction, when the markets are trying to find some sort of support around that 7700, 7720 odd mark, I think, the fact that the mid caps are losing is probably a signal that, we're nearing the end of the correction from a short to medium term basis. I believe, the approach here should be to try and be a bit cautious, be very stock specific or be very selective. I think you should probably look at the confidence side of the market. I would recommend, a couple of stocks from the buy perspective and really not want to go or look at the short side, especially in the mid cap names.
All right. Also, let's welcome Chandan on this. Chandan, what's your view on the frontline index? Because the Nifty, after the initial gap down, has now managed to consolidate within that 40-point range. Is that a sign for a fresh trade on the long or the short side?
If you look at the entire market, index has been falling down from last 3 weeks and making lower top, lower bottom formation. 7750 was a major support, and I think if it holds, then only we may see a sign of reversal in the market. But as of now, the way it is continuously finding multiple supply, it's very tough to take a call on the index. If it sustains above 7750 on closing basis, then only we may hope for a bounce back move to a 7850 to 7920 levels. If it fails towards 7750, then selling pressure may continue towards 7650 to 7620 levels on the downside.
Chandan, we are awaiting Coal India's earnings, but it's expected to be fairly good because of the volumes that the company has clocked in. So revenue growth seen at 10%, profits are seen higher by more than 20%. Any trading strategy ahead of their earnings?
Yeah, ahead of the earning, I'm suggesting to go for bull call spread. If you look at the price pattern, the index has been falling down from last 3 weeks, but the stock has been consolidating and trying to sustain about 335, 337 levels. The stock is finding hurdle at higher levels near to 50 DMA, but holding about that may see a move towards 350 to 355 levels. The stock is now going to move after the result of the counter. So better to go for the strategy. Here we have positive view on the counter as per its price pattern and the database. So recommending to go for bull call spread. Buy 340 call, which is trading near to 7 rupees. Sell 350 call near to 4 rupees. In the entire strategy, risk is around 3 points. That comes to around 3600 rupees. And reward is around 7 rupees. That comes to around 8400 rupees. So 1:2 risk reward ratio and limited risk to reward strategy. We are expecting positive move in the counter.
All right, coming back to Kunal. Kunal, you were saying that there are a lot of bottom-up strategies for individual stocks in the mid-cap space. One of your recommendations is TNPL. Now, that stock has been on a tear since it posted a very good set of numbers. Do you think there's some more juice left in it? And also take us through your other strategies, the buy on future retail and DCM Shriram.
Absolutely, Mangalam. I think the first stock which I've recommended is TNPL, and I think from a chartist perspective, I think you look at the last 5 years, from 2010 to 2014-15. Over the last 5 years, you saw an interesting cup and handle pattern. The neckline was closer to 180, 175 levels, and the moment the chart broke, the stock broke that particular pattern, you've seen the stock on a tear. And I believe that the longer-term pattern, which was almost a 5 years consolidation, would probably continue for the next couple of quarters, at least for which is what I'm expecting. If you look at it from a target perspective, I think the positional target from a longer-term trader would probably be in the range of 280 to 300. But from the short-term perspective, from the channel perspective, I've recommended a target of 256 on the stock, keeping a stop loss of 234. The second stock which I have from the buying perspective is FRL. I think the stock is just about formed a fresh swing high. I think from a short-term perspective, the indicators are also suggesting that the stock has entered into a good buy territory. I'm looking at a short-term target of 140 on FRL, keeping a stop loss of 126. And the third interesting stock, which I believe could probably hold a lot more potential, is DCM Shriram. From a short-term perspective, the stock is trading at 130 and 139. But looking at the swing highs and the recent chart patterns, which is probably more or less a bullish pennant formation, I believe a target of 155 is extremely possible on DCM Shriram, keeping a very tight stop loss of 133.
By the way, European markets have opened up largely flat. So you've got the FTSE and the DAX, which have opened with cuts